Welcome to Talk Tickers, where we break down the quarterly earnings calls that matter. Today, we are digging into Victoria's Secret & Co.'s Q2 2025 results. And this one, well, it's a bit of a head-scratcher. I mean, Victoria's Secret just delivered a quarter that, on paper, looked absolutely fantastic. So you'd think the stock would soar, right? Well, the market's reaction was confusing, to say the least. Let's really get into what's going on here. All right, first things first, let's look at the headline numbers. The stuff that got everyone so excited at the open. Okay, get this. They reported adjusted earnings per share of 33 cents. The analysts, they were expecting just 13 cents. So yeah, they more than doubled it. A huge beat. And it wasn't just on earnings. Revenue also came in strong, beating expectations at $1.459 billion for the quarter. And this is what really shows the underlying health of the business. Comparable sales, they grew by a really solid 4%. That tells you the momentum is there. Okay, so you've got this great report, right? And just like you'd expect, the stock popped. It was up over 8% in pre-market trading. But then, here's the puzzle. It completely reversed course and actually closed the day down. So what in the world happened? What spooked investors so badly? So to figure this out, let's first look at the bull case. You really have to dig into the operational improvements they're making and the progress on their big turnaround strategy, what they call the path to potential. So this whole path to potential thing, it's really built on four main pillars. They're trying to supercharge their authority in bras, recommit to the pink brand, keep fueling growth in their beauty segment, and just generally evolve how they project the brand. Pretty straightforward. And look, this isn't just talk. The strategy is actually leading to some tangible wins. You've got the new FlexFactor bra, which drove double-digit new customer growth. They gained almost a full point of market share in bras. And their beauty business, it just delivered its 8th straight quarter of growth. That's real progress. Now, if you want a perfect example of this turnaround in action, you got to look at what the CEO, Hilary Super, said about the Pink brand's collaboration with Love Shock Fancy. This collaboration was a huge deal. Why? Well, it generated a ton of traffic and people were buying a lot. But more importantly, it proved they have pricing power. They did it all with 0 discounts. And get this, they executed the whole thing in a new, faster 26-week production cycle. That's down from 52 weeks. They literally cut their lead time in half. That's a massive operational win. Okay, so all of that sounds pretty great, right? The turnaround seems to be working, but there's another side to this story. A massive headwind that pretty much overshadowed all that good news. And here it is. Management dropped a bomb on the call. They now expect the hit from tariffs for the full year to be $100 million. That's a $50 million increase from what they were saying before. It literally doubled. That's a huge number. And you can see that financial pressure written all over their guidance for the third quarter. I mean, look at this. They're forecasting an adjusted operating loss of between $35 and $55 million and an adjusted EPS loss between 55 and 75 cents. This is all happening even as they expect sales to keep growing. The tariffs are just eating into their profits. And right here, this is the core conflict, the whole puzzle in a nutshell. They feel good enough about the business to raise their full-year sales guidance, but at the same time, they had to keep their operating income guidance flat. Why? Because those increased tariffs are just completely wiping out any potential upside to the bottom line. So, the big question is, what's the plan? How are they going to fight back against this pretty significant financial pressure? Well, they did lay out a plan. They're talking about optimizing costs with their vendors, diversifying their sourcing to new countries so they're not so reliant on one place. They're even shifting freight from air to ocean to save money. And they're looking at some targeted strategic price adjustments. But the key thing to note is that they said the real benefits from all this probably won't be seen until 2026. All right, so let's put this all together. Here's our take on Victoria's Secret stock as we head into the next quarter. So you really got two competing stories here. The bull case is basically saying, hey, the brand turnaround is real and it's picking up speed. The new products and marketing are working, and that's what matters. But the bear case is shouting back, yeah, but that $100 million tariff headwind is just too big to ignore right now. It's going to crush their margins. So for us, we're landing on a market perform rating. You've got this really impressive internal progress. I mean, the turnaround is happening, but it's being almost perfectly canceled out by these external macro pressures. It just creates a really balanced risk profile right now. Now, for our outrageous but plausible trade idea. The thesis here is that the market is just too focused on the short-term pain from these tariffs, and it's undervaluing the long-term brand turnaround. So one way you could play that is by looking at long-dated call options, maybe 9 to 12 months out. The idea is to capture the potential future upside from them fixing the tariff problem in 2026, while kind of sidestepping the weakness we're all expecting in Q3. And as always, this is not financial advice. And all of this really leaves us with the ultimate question for the next few quarters. Can their strong execution and real brand momentum truly overcome a macro headwind of this size? That's what we'll be watching for on the next call.